Um, I'll start with, I guess, stating the obvious, which is that smaller companies find it easier to grow. So you can look at history going back to 1950. We've looked at data since 1950 shows that as companies mature, as they age, their growth slows. We're talking about sales growth, asset growth. And it makes sense that a company is going to grow much faster off a low base. If we look at some of the largest stocks out there at present, like Microsoft and Amazon and Apple, it's no secret that the EPS growth is slowing. It just gets much harder to move the dial. You can't even buy your way into growth. It's the law of large numbers taking effect. Whereas if we look at companies historically, and including some of the most successful companies in the US stock market, like Starbucks. I mean, if you bring up a chart of Starbucks, you won't even notice its early years because you just can't even see it on the chart. But if you look at it in log scale, you'll see that typically even very successful companies like this over the long run have had their best period as a microcap. It's even like a Starbucks that's generated 19% per annum since it graduated beyond micros. When it was a microcap, its returns were double that. As people got a wind of the fact that, okay, there's a massive rollout story, it's a great format that works and attracts people, and then you see more and more analysts, sell-side analysts looking at the stock, but by that stage you've missed the best part. You've missed those microcap returns off that low base. One of my favourite examples is Home Depot. Effectively it's the Bunnings of America. So again, a rollout through a huge market, fantastic retail concept. But again, a company that's returned so well over the long run, but yet as a microcap, more than double the returns. And so if you can catch these companies early on, you get better returns before the rest of the markets notice them, and the growth is so much easier for those companies. If we look at more recent examples, like Europa, this is a company that's owned in its top 10 by quite a common fund manager in Australia. Again, it's done great over the long run, but as a microcap, it did even better. Nvidia, one of the best performing stocks in the S&P over the last 5 years, but as a microcap, it tripled. So yes, there's some great companies. Yes, it's great to own them over the long run, but even better if you can find them early before the rest of the market has. So, I think we really have the wind in our sails in that these companies are growing easier, they're not discovered, and so for us it's so much easier to get that growth than it would be for a large cap manager.